for this Tuesday, November 19th. If you never watch any of the other YouTube channels or anything else I say, just think about this. We open up bullish. We do a poll every morning, and most people were bullish. And guess what? They should have been. The market was bullish. We were opening up after some negative news yesterday. We shrugged that off. We closed strong yesterday. We're opening above yesterday's high, yesterday's close, obviously. Strong open, meaning going into the open. Everyone's bullish. There's nothing wrong with that. Actually, you should have been bullish, bias-wise, coming in. But the key is take a look at the right side. As soon as we open up at 8:30 Central, we go straight down and we start not to look back. Now, we don't know it's going to continue to go down. Nobody does. But what we do know is that we open up and do nothing but go down. So I started to say at this moment in here, and definitely around the 24-25 moment in real time, that this is a dangerous day for most people, even for people who know how to trade. This is a dangerous day because we opened up bullish. We opened up tilted with everyone being bullish for the right reasons. So what do people do when they're bullish? They buy, especially when it comes down. They're like, ooh, I get a little cheaper. So you're getting a lot of people opening up long positions. And guess what? If it's a day where it turns around and goes up, that's fine. But when it doesn't, you're getting more and more people stuck long. They're very bullish. Now they're very long. And I had said at this moment, barely 15 minutes, 10 minutes into the trade, very dangerous. And the pullbacks, like we had a pullback right in here, you could barely see it because there wasn't much, was to 25 even. I told people, you can't look to squeeze something above 25. It gets above 25 half, 26, we could square it up, but there's a reason why it stopped at 25 in here. There's a reason why it stopped at 24 in here. There's a reason why it stopped around 22 and a half in here. Short, shallow pullbacks on this selling because too many people were like baby birds stuck long looking to sell to get out, chasing it down. People are not good at exiting losing positions. They're very in their haste. Everyone's hasty to get out of winners, but very patient and stubborn to get out of losers. Because the worry getting out of loser is, hey, what if I get out and then it goes up? Let's say you're long and you're looking to puke that loser for 5 ticks. But what if that's the low tick and it rallies 5 points right to where I thought it was going to go? Guess what? Too bad. That's going to happen. You have to have your plan, and your plan has to be know where you're going to get out before you get in to strip out all the emotion that's going to fill yourself up once you get into the trade. Once you get into the trade, there's a lot of subjectivity that's going to enter your body. You got to fight against that. So on a day like today, it's different when you trying to buy something, when you open up and a lot of people are bullish because a lot of people now are long, getting long, and getting stuck. And there was a moment until like the best pullback was right in here. And I said, now it's going to just chop around before it reclaims direction. Just be careful with being patient if you're long because it's still tilting sideways to lower. And I go, when we have these pullbacks and they're still penetrating some of these lows, that it still has this dangerous part intact. So it's uncomfortable to sell it on a pullback because they seem to be shallow. But it should have been more uncomfortable to get long and patient. So they capitulate a little bit more. They attack the overnight low. They don't pull back at all. And this is all real-time stuff that you're analyzing. And the best pullback was right in there. Let me show it again. Bam. There's a difference between the distance it went from low to the spike and the tempo in which it went. And I had told people that's the low. Might not be the low for the day, but that's at least the temporary low. And we didn't run up with any kind of randomness after that. It was the tempo in which it was rejected. And the metaphor I like to use, in your single days, you're a guy, you're at the bar, you're talking to a girl, buy her a drink. She's talking to you. You think she likes you. You're really not sure. I think I might get her number, and all of a sudden she slaps you in the face. You're rejected. Not going to happen. Stop buying her drinks. So that's rejection. The lows got rejected. And now the market was able to walk up. Rejection also or often has tempo. When she slaps you in the face, there's some tempo there. Something changes. So that was the speed at which it went up. And now it would have been uncomfortable playing from the long side, but this would have been the best time to play from the long side before you even know what happens. So it's important on gap open highers, gap open lowers, know that the conventional wisdom is going to be bullish for the right reasons, going to be bearish for the right reasons, and that's fine. It might keep grinding up after we open. When we open on a bullish day and start grinding lower, just be careful getting long. Too many other people are going to do it with you.